How's your week, Pete?
Oh, really good. Just the amazing thing about the week was I was actually short on a few things that kind of stayed down and just and like in phase did not get much of a bounce from what was going on Friday. Just started to hit my downside levels. MDB, same deal. Overall, the some of the SaaS stocks, didn't really get much of a recovery, like crowd stuff like that. So I was happy with that because in the same way that finding moves to the upside when the market's selling off, um, you know being able to target that weakness if you're looking to go short, that was encouraging. So really like that. Good move on oil too. So happy with that.
Yeah, I'm still in that coming off of vacation mode, so um I guess less is more, or only in second or third gear, not in fourth or fifth yet. But did really well. All our work last week was great. Not much missed. And it's just funny that you're saying you're playing the downside and I'm on the options and I'm playing the upside on the shares. It's just interesting that the market can offer that, as long as you kind of do your homework. I guess it's the best way to say it. Um, we don't hit a lot of home runs like that, but man, I really think what we did um, last week was out of the park. Again, I mean, I tried to stay inside our box last week for the most part. Um, Outside of the one social play I called midweek, that just was, it looked too good to not say something. Um, but other than that, the market is offering the point of that is the market is offering anything right now. Um, if you understand your style and just how to play a setup, you can find that setup somewhere in the market. And the range is also really good, which that's the range dictates the money off the setup. So for me, um, I did not make goal, but I had an amazing week. If I would have traded, normal sizing, normal amounts, took a little bit more risk, I would have killed. I would have just smashed my goal. Um, but
Yeah,
a
well, and
green week to start out is what you're looking for, week one, right? Base hit.
absolutely. And the read on metals, this has been kind of months in the making, talking about how copper was holding up and what that meant for steel and aluminum. Interestingly, CLF has been better than X. They've both been good, but CLF has just been just off the charts good. I have about 25% of my original position just in
Yeah,
shares on that I've just kind
yeah,
of let go. And in basic materials, I mean, that's kind of what you want. I mean, that's what I learned from AA the first time and from Dow, where if you can just leave a little bit in free shares, and they can just keep going. So really happy with that as well.
yeah. That's more of when I got back into the, not necessarily oversizing yet, but the original theory is you oversize and then kind of cut back to what you want to keep at 10%. Um,
Yeah.
for more of a swing trade. And I haven't done the oversizing part, but cutting back to a smaller amount what I want to keep for a swing trade has definitely paid off in some setups. But you do get that FOMO. Man, what if I would have kept full size in there, or stuff like
Yeah.
that. But you got to kind of play within the boundaries, and right now that's just not where we are. But those setups, boring stocks as I like to call them, have been the best outside of China.
Yeah.
So yeah, this week let's look a little forward. Kind of, I guess, start at the end of the week with that CPI. Um, I'm kind of curious of what you think going up into that is going to look like. You usually have more clarity from what you do than what I do. Um,
Well, I think you had a pretty message with that support at 3,800 and SPX and how that just refused to break down. And so we got a little bit of a run here. Uh, Probably, and I the one area of trading I don't really get in on that much is the whole like short squeeze kind of mentality or outlook. But that definitely I think was a gamma squeeze on Friday, and with the zero DTE calls. And so anyway, so that 100 is only going to break down if there's a big runway. So like it would be a day that takes it down to 1.5, 2% or something like that in a day, instead of just creeping up on it and then breaking down. Um, so if we do get a move to the downside, it's going to have to be something like a really hot CPI report that'll just kind of shove us down there. I kind of like the upside more going into the report. We'll see how the market reacts to Jay Powell, I guess, is talking on Tuesday. So it's definitely a week where you got to be mindful of the time of these events. And if you're just trading standard setups and levels, you just want to be careful holding through all that stuff.
Yeah, definitely. For me, we're definitely. It seems like we're trending up into the
Yeah.
report, right? Just in general, if you look at charts, it seems like we're back into that front loading numbers in hopes that they're gonna finally be good. And we called bottom is just what it feels like in every chart. Um, I think there's the simplest way for me to put it, not take a bunch of time, is I think there's enough news coming out in the next 2 weeks with CPI and then start of ER season that it all can't be good. So we're gonna get this pull back into this channel. I'm still, I think I said last week, SPY rejecting at 400 because that's the only one of them ones I really watch outside of the Qs. Um, is big. I think we still get there. So I think that's the pump into the week, is that whatever that takes to
Yeah.
get to 397 400 range. If we make 397, we have a chance to get 398. If we make 398, we have a chance to get 399. If we make 399, 432 cents is possible. Load calls.
Yeah. Right.
Sorry, sorry, sorry. But yeah, I just see that trend. Even if you look at the chart, like on the weekly, it's pretty tight. And I think we hit like 5 or 6 last time. 410 last time. 410 was kind of the high. So yeah, I mean, it's not out of the question to get a little weekly spike into this report and it not be good, and then have a couple weeks of decline depending on what it is.
Yeah. Yeah. I'm with you.
Do you see ER season being the next major black cloud over the market, or do you think that's going to be
Uh,
already baked in
yeah.
here,
I
already
think
baked in?
there's there's signs of that, especially with you saw like Macy's already came out with some disappointing numbers Friday after hours, and anyone who kind of retail sells products and that kind of thing um, is not going to probably have a good time with earnings.
Mm-hmm.
The I think a couple of the tech stocks could surprise and do well,
Agreed.
software in particular. But yeah, I think your Amazon stocks like that, I wouldn't be too optimistic about their earnings.
Where are you? And I think
Tesla too.
yeah, yeah, that's where I was going. Where are you with the stuff you call more consumer defensive? I believe is what you call them. Like your Cokes, your Pepsis, um, are those guys? Like, where are you with those? Walmart.
Yeah, I think Coke is likely to check back down. Nothing catastrophic, but into like the high 50s or mid 50s. Um, yeah, I think that.
You think they missed though? Like they all are gonna have, like, we're still trending down in in
Yeah, they
in
they miss, and
sales
then
in
and then
sales. Okay, okay.
I like the recovery on those. So I look for a decent miss, and that'll drop it. Like Coke doesn't really have a catastrophic drop
Sure,
usually, but
sure.
yeah, if Coke drops 3-4% on earnings, I would look to buy to the upside there. Walmart, can miss a lot bigger, and I also like the bounce there. So Walmart, I think, yeah, I could see it in the flow. When you look at the flow on Walmart, that 124 to 132 range to the downside is possible in some of the March puts.
Yeah, I just see it being very mixed, and obviously most of them aren't going to be as expected, and obviously each stock's going to respond differently. I mean, a 3% drop in Tesla is not the same as a 3% drop in Apple, or
Yeah.
Ford even. Let's use Ford since we're staying with cars. But like, I don't think people, that's a good one. I don't think the car numbers are going to be great. Some of those charts are already oversold, and some are haven't really sold off yet. So for me, it's just kind of finding the way to play. But I just wanted to get your general thesis on if that is kind of the next dark cloud we got to make it through, the next headwind, because I really feel it is. I really feel like a lot of businesses gave it one last go. Um, Bobby B in particular is one, and just didn't do good.
Yeah.
They
Yeah.
just didn't do good during the Christmas season, which that's where a lot of people, like, let's just say a lot of retail makes like 30-40% of their revenue during that time. The brick and mortar retail. Um, and that's just not
So you,
the environment anymore, especially after COVID. Like, people aren't going shopping in the mall anymore. They're just not doing it.
you've been around more cycles than me in trading, and especially in small caps. So I had tried small caps and just sort of completely just tossed them aside for a long time, and then I realized that, well, if these have options and option flow, that I can actually play these. But I'm wondering in particular about bankruptcies and how small caps react to that, and how sometimes they'll reverse, really strongly, and like move to the upside after an initial kind of collapse. Do you trade those? How do you trade those? What is your take on that?
I usually treat it kind of like the read the report part of how we play the ER,
Yeah.
especially with the bankruptcy. But bankruptcies can go either way, especially if they have assets. Because bankruptcy doesn't always mean out of business. Um, so depending on like ASRT was a big one, and that's what got me onto them. I mean, they went through a bankruptcy and a reverse split, sold everything, but they had money. And just if you did the math on the money and the shares, right, it was 420 something a share, which is we're finally there 2 years later, 3 years later actually from the bankruptcy. But you just kind of got, that's when you do have to do a little homework. It's not like a bankruptcy means up, bankruptcy means down. Um, you do got to get into the assets and stuff then, because if they have money, they're still going to be valuable. They could be worth more money because they could have been in a situation where they were paying on assets. Like, let's just say they own a bunch of property, but they're paying on it because it's not full. Well, if you go to sell that through bankruptcy and you come out the other end with money and you're not losing money every month, you just have a pile of cash, you can pivot your business to something else. And
Yeah, well, absolutely. And it's like for
that's
an
what it
individual,
is. Yeah.
a bankruptcy can be a good thing.
Yes.
If you shed and reorganize a lot of debt, keep your core assets, and then you're able to keep more of your income, et cetera. So yeah, I completely see that.
Yeah, and the one I can
Um,
talk about like clearly is ASRT, and that's really how it works. I mean, it's kind of a process through time, and you got to let it develop. But to kind of go back to what you were saying in the first place, like the penny stocks, small caps, micros, whatever you want to call them, they're going to have higher highs and lower lows, and they're not going to be as fast as cycles because they don't have as many eyes on them. So like again, ASRT, we played that was it 2 years ago or last year? It was like a buck. Um,
yeah.
and it takes time. Like, but the homework, you have to do the homework at the time of the bankruptcy, and you'll see the play, and then you just wait for the setup. That one you had to wait for a reverse split, and then it get down to the dollar at the time in the market. Like any stock that was under a dollar, people would just chew up, and that kind of happened with that as well. And then it continued the trend for what 16 months or whatever. I don't know. But yeah, so that's a homework thing, P. Like, I wouldn't jump into a bankruptcy, or what's the other one? There's another one. Um, I can't think of the name right now. That's why I like mergers a little better because that's easier to. I mean,
Yeah.
you can read through a merger in 5 minutes. A bankruptcy is going to take you some time because you really have to get into the assets and what they're trying to do in bankruptcy. Like, are they just going bankrupt to pay off some bills? Or are they trying to get out of a bad situation? Um, yeah, that's as simple as I can put
Well,
it.
Party City stands out because we had let this one go a long time ago, and it
Yes.
had already fallen
Yeah.
to under 40 cents, and then it dropped 50% on Friday, went up 30% after hours. But if you just know math and look at the chart, I mean, that's not much of a
Move.
recovery,
Yeah, yeah.
back up to 20 something cents. So yeah, everybody's thinking they're just going to run this one back up. And this, to me is just sort of just retail driven hopium that they
Yes.
can take this thing back. You could, I think, scalp this very quickly. It's risky. It's almost like playing a zero DTE option or something where, yeah, you can go grab 10% fairly quickly. You could also lose 15% in 20 minutes. So anyway, yeah. So I think be cautious there. We let that one go for a reason, but it's still fun to watch. I still watch these charts and see
Yeah,
what people are doing.
I'll say. let me read this post-it note right here. It's getting wrinkly though. Sector profitable trend level. Well,
Yeah.
Party City's a brick and mortar retail company. they're far from
Right. Right.
they're far from profitable. That trend is straight down, and I do not have a level at 40 cents for you. So, I do like
They
that.
also they
Go ahead.
took on Party Galaxy, like they
Yeah.
merged with them, and it just sort of added to their problems if you look, in hindsight.
Yeah, and they might make it through, and we might be back on it. I mean, trust me, I'm like you. I watch the chart, I check the news on it. If I see something that seems like it's going to be a catalyst, I'll definitely say something. That's what you got me for. But I like a stock like, let's say, Zom a little better. You heard of that one? The
Oh yeah, yeah,
God, what's her Carol Baskin one, right?
yep.
Just because they're profitable, they have a product that came out recently, right? So if you check the numbers on that, that should go up a little bit. So if you want a shitty penny stock, like in a trend, they don't have brick and mortar. It's an online, you buy it online. It's like dog medicine or some shit like that. Um, but I like stuff like that with just a little bit more of a headwind or a tailwind look to it than retail, which just has, to me, retail's going away. Um, yeah, it's just commercial real estate. Retail's
Yes,
in trouble.
and from the flow side, because Party City does have 50-cent calls, we could get in a situation like Mullen where I can actually read it,
Yeah,
but
yeah.
it's going to take a little bit of time for it to settle down here. And if it starts to get in that 30-cent range and park there for a while, and I start to see flow come in on the 50-cent calls, a little bit like Revlon, how that
Yes.
that whole thing went down.
Yeah. Yeah.
That's definitely possible. So yeah, something I'm looking for, needs more time, but very interesting, and you're going to see a lot more bankruptcies, I think, coming up. So
I like that
something to
you're
watch.
watching that one because that is on my list of like long term, just wait for this thing to turn around list.
Yeah,
Um,
yeah,
but yeah, it's anything's possible there. Um, let's get Spy out of the way real quick. What do we
yeah.
have? What do we have last week here? You had 37. I think we mirrored each other damn near last week. I said 37. My dyslexia kicked in there. Hold on. So you had 37.5 to the downside, and it was 37.75 or 37.78, and I had 37.2. So you were way closer on the downside. And the top side was 38.9. I beat you on the top side. Interesting. How did that happen?
Yeah. The unemployment came in sort of reasonably favorable. The ones on Friday, so
Yeah, it
that's
was
what gave it that
Friday.
boost.
All Friday. Yeah, I
Yeah.
see it there. Nice, nice. Does this trend continue? I guess that's where we're at, huh?
Yeah, so the weekend flow is always interesting because I mean the first thing I have to do is just get all the Friday expirations to the side, and so I have some filters for that, and then it's always when you have a big move on Friday, it's like what open interest is going to carry over. So there's some kind of conjecture that happens there. Sometimes like I can instead of looking at the like spy where it's really noisy, I'll target some specific tech stocks and kind of see where their flow is at. If there looks like there's going to be some momentum there. So I do actually see a little bit of upside um, start of the week. I don't think we get a real dramatic pullback off Friday. I think there's some continued momentum there, and I'm looking for an upside going into some of these numbers at about 402 is where I'd set the upside on SPY.
Oh, wow. Nice.
And then if it's bad, let me see here. About 385 is my downside.
Geez, I'm gonna be a bear this week. I'm going with this 395 volume profile level on the 1 year. I think we're gonna get caught up right around there. Um, and then on the downside, I'm real close to you, maybe but 381.
Hmm.
Just because I don't think there's much more downside because it's gonna be 1 day, right? Like next week we'll be talking about with new information we'll be talking about okay, those numbers weren't great, a couple of retails numbers coming out, the banks aren't looking good. We'll have that kind of conversation next week. um,
Yeah.
so I think we have the run up and we don't get to the letdown part. Looking at SPY though, are you surprised we haven't touched 370 in like the last 3 weeks?
Yes. And I mean, that is, we get given the early week data, we probably should have gone there. Just if you're just looking at where we were coming from and
Mm-hmm.
the numbers, but they just really protected that 3,800 level. They just were not going to let that break down. So then it turned into this situation where what I actually thought is that we would check down to those levels a little early in the week, and then the hope was unemployment comes in favorable and we get back over 3,800. But instead, we were already there, so the move was higher, was obviously to where we're at. So yes, I was surprised at that for sure.
Yeah, for me it's it that it hasn't kind of keeps leading me into like this is the soft landing. And if you look at the weekly, I mean it's not like we're dropping through levels. I mean it's definitely has a lot of range. SPY going from like 370 to 430, 360 back to 400 over a couple months. That's a dramatic range for the chart, especially if you look back in the you know 2013, 14, 15, 16. Definitely not as big of a fluctuation. But we don't have the COVID. I got the weekly up on the 10 year right now. We don't have the big COVID dip at all. Like that's not happening in my opinion. Um,
Yeah.
but the soft landing, what they don't tell you, it could take time. And this trend right here of of wide ranges and down every $10. I mean, because it's really $10. We went 370, 360. Um, it's really $10 at a time, but you're talking 4 months to do that. Very tradable, but I am starting to see that pattern, and this is the soft landing they talk about, in my opinion. Um,
Yeah, and if you want to short stocks, I think that you have to be very careful about shorting close to 52-week lows on most stuff.
yeah,
Some of them are going to break down below that, but like net, for example, is it's $2 off its 52-week low.
yeah, yeah, yeah.
Yeah, you can probably short it for that $2 drop, but it's not going to last very long
Mm-mm.
because there just isn't, unless they have a disaster earnings or something. I mean, they would need an actual push down. So if you want to short things, you should be hoping for a nice run up this week because it's a hell of a lot easier to short SPY or anything else when it pumps like that, and then you get bad news than it is to just try to keep shorting it around 380, thinking you're going to break down because you can just get burned on that.
I mean, even if even if your thesis for me is that it's going to continue down, you want a better price, right? Like, so wait for the day it
Yeah.
runs 4 or 5%. If you really think it's going down, why wouldn't you wait for the day it runs 4 or 5%? And um, for me, all time lows. I mean, unless the trend's bad and the news is bad, they're in a good market for me. They're playable because they're safe. They will recover off
Yeah.
of all-time low. This current market, that's not a strategy, but I mean, you talk about it way too often. If it pumps pre-market or if it drops pre-market, you're usually going to want to play the other way after the flush, and it's no different in like a Carvana or what else is down there right now? There's a few of them down there. I guess you could say Rite Aid, Tupperware, all that. I mean, Tupperware's not going
Yeah.
to $1. That $4 level's holding. Is what it is. Like it's not a short play. Um, I don't know. Just ranting on that a little bit. Wheat or oil? Let's get to the meat of this
Yeah.
here.
So yeah, let's talk weed for a minute.
Sweet. I like weed. It's good stuff.
So Tilray has earnings this week.
Yes.
That's definitely going to be a big part of things. I guess it's is it Monday after hours? I guess.
Here, let me look real quick. I can pull it up. It'll be on there. Yes. Oh no, no, it's Monday morning.
Oh, Monday morning. Okay. Well,
Yeah.
that's gonna say a lot about
Yeah.
what's gonna go down with these. I kind of like a couple of the other ones, C, CGC and Grow G.
Yes.
Um, they are in a spot. I mean, weed does this thing where it pumps and then it sells off. But I think we're checking back down, kind of a higher low here, and definitely have some optimism. The flow on them, what you see is like a month or two out is pricing in like a 15 to 20% move to the upside. That's sort of where the flow is. So that's why I like these right now.
Yeah, they're just. I like them because they're rangy in general. There's there's two minds in the of the sector. Either it's going to be $1 billion business in the future, or it's not sustainable at all, needs to go away. I mean, that's pretty much how people look at it. So you get that oversold, overbought look to them all the time. And currently, we're definitely oversold because of market conditions and just their sector in general. It's not really, it's patchy to say the least. Um, but doing things like the bank deposits, the CBD, FDA stuff, those brick by brick little pieces are going to help them level up to not this oversold back to the fair value. And the three or four we're on are really really good. You just kind of got to play the chart levels and get ahead of the news, in my opinion. Um, for me, the TA is always first on these.
Yeah.
It just is because they're oversold. Um, that probably will change in the long run when they actually do have legitimate business setups, interstate commerce, stuff like that. Um, but yeah, yeah, I'm just interested, especially when we get into our session, or what you're seeing and which ones, because there's definitely one of the three. I definitely have a ranked order of those three. So
Yep. And in oil, the setup in oils is really pretty clear right now. I talked about how prices check back down under $80. I said I thought it would hold 70, and um, it did. Looking for a move in oil back to 80, at which point we might just get in a range for a little while of like 72 to 80. But the more important thing about that is that the stocks themselves stayed pretty stable during all this, and after they dipped, they ripped right back up. And you look at something like Zom back over 110, very legitimate opportunity to head back to all-time highs for that one. Oxy is in a good spot as well to head back into that 68 to 70 range. Devon, our read was right on there where it did more than some of its peers, but really held in that mid 50s, back over 60, could go to 70, 72, something like that. So
woohoo!
yeah, so oil is primed for continuation. That's kind of my main idea there.
Yeah, I'm I don't give myself the greatest grade on those charts. I should have been like really into those charts back in April when you wouldn't shut up about oil. Um, but but on these rebounds or holding levels, I've tried to been monitoring them a little bit better, and um, yeah, I think we nailed Devon. Um, Oxy is what it is. That's the blue chip, and the Dino I like. But there's a lot of other ones that are oil related that we're on as well, and you can already see them perking up. So um, I like your timing's real good on those. So I'm glad you're back on oil, and um, I, I definitely don't see us staying in the 70s in general very long. Just I just don't see that happening. So I kind of like that that's your high end number because I do think we're going to trend back into the lower 80s. There's no way we're staying where we are, um,
Yeah. Yeah.
especially going into the summer again. Like this should be theoretically the lowest prices of the year. Like that's your January, February, March, and then once April hits, oil is just back in demand. So um, a lot of talk of the pipeline too, the Keystone out there. A lot of talk of that. A lot of talk about
Yeah.
our production levels. They're finally politicizing the strategic oil reserve, um, which that's real hard to find information on. But yeah, yeah, I like it as a sector where like people do run to also when things get bad. So which we seen this time last year.
Yeah, yeah, for sure. And I'll definitely have a few on the hot list for oil.
Yeah, I follow your lead on that one for sure. It's got to know what everyone's good at, right?
Yeah.
Down there in Oklahoma, you're good at the oil. Up here in Washington, we're good at the weed.
Right.
Oh, jeez. Um, perfect, perfect. Well, let's get into some charts.
Yeah.
Perfect.